Hi, I'm Grant Stevens.
And I'm Kris Bernier.
And we're the Two Investment Guys. This week, Kris and I want to turn back to the markets and talk about some of the recent developments there. You know, when we look around the globe, the indice returns year to date are very mixed. For instance, in Canada, we're down 4% so far this year, and that's coming off a high of being up about 7 or 8%, Kris. The Dow is hanging in there in positive territory, up 4%. Even over in Europe, we're seeing mixed returns. France is down 4%. Germany is up 8%. But everybody's off the highs of mid to late March. We had a big market rally there. And really, you know, the recent weakness, Kris, is some of the things that you and I have talked about in the past. Mm-hmm. I think you can sum it up into an equation, and you can say that a big market rally plus no positive news at the moment, plus euro developments and weakness around that equals a sell-off. Mm-hmm. And that's what we're getting right now. Why don't we talk about what some of the drivers are in the selling sentiment?
Sure. Well, the saga in Greece continues to go on. Recent elections there yielded absolutely nothing in terms of an absolute result. So it looks like they're going to go back to another election in June. So that issue is still creating uncertainty for the market. And, we're seeing a continuation of the fears around the debt situation and the contagion that could potentially result if things worsen substantially in Greece.
Yeah, and the problem is that investors have a really hard time looking through where this takes us in Europe. If we turn to the States, quite recently, some softness in the economic data. It's still positive data point, Kris, but it's, what happened was the jobs report came in slightly lower than what was expected. Some of the manufacturing data turned a little bit soft. So we see some of these little points that are incrementally weaker. But I would say that on the earnings front, we just come through the earnings quarter and we saw a beat ratio of about 70% again, so that's not too bad.
No, absolutely. In Canada, we've had 2 consecutive months of very good jobs reports that actually blew away estimates, so that's been very positive. And if we look at China, there's been all this talk about China slowing down, but we need to remember that China has come a long ways from where it was a decade ago. Second largest economy in the world now, and 7-8% growth in the second largest economy is still pretty impressive.
Yeah, big player all the way along on this, right, Kris? So we're going to sum up that, and where do we go from here? Well, again, let's go back to some equations. A couple things may happen here. One is, if the Eurozone stabilizes and the U.S. data points turn a little more positive, we will probably get a rebound from here. However, if the Eurozone continues to deteriorate on the debt side and the U.S. remains soft but not necessarily contracting, then we'll see more selling, and that's just the way it's going to be.
That's right. One thing to remember, and we've said this for a long, long time now, our view hasn't changed, is you want to focus on yield, get paid to wait for growth. Whether you're spending that yield or reinvesting it, it will contribute greatly to your portfolio returns. We want to thank you again for your questions and comments. Please keep them coming. You can contact Grant and I at TwoInvestmentGuys.com.
Join us next time. Kris and I are going to continue our discussion about markets and the current issues. So until then, I'm Grant.
And I'm Kris.
And we're the Two Investment Guys.